Good morning, everyone. Happy hump day, happy Wednesday, happy Fed day. We are just about to get started here. Get my notepad ready here. Okay. All right. Good. Okay, let's get started. Again, good morning, everybody, and happy Wednesday. It's Fed day today. As always, if you're here for the first time, welcome. Please make sure you subscribe to our YouTube channel. Obviously, here it's free. The benefit, of course, is that you get updated in real time when we go live with analysis, insights, podcasts, and so on and so forth. I had the pleasure of having not one but two tremendous conversations just yesterday with real market insiders that you guys are going to hear about here before long. So stay tuned for some of those special podcasts and insight here soon. Of course, when I say special, we do something I think special every day, which is this show here, the morning call, and of course a lot of other insights. I want to quickly also point out while I have you guys here, if you want to listen to sort of my broader current thoughts on things as it relates to kind of risk management and stuff, I'm going to give you a link right now. Let me quickly bring it over here. That's this one here. It's this video here, and I'm going to put it in our public chat here so you guys can go watch this video. It's about 25 minutes long. It's essentially just me talking, but we're talking about sort of big picture stuff that I think everyone needs to be aware of. So I dropped the link into the little chat box there. So let's get started. And obviously we've got a Fed day today. Several things we need to talk about. The top three things this morning are quite simple. It's the dollar, number one. Number two, it's the dollar. And number three, it's the dollar, right? That's what's going to matter here today. In my view, the reason for that is quite simple. And it's nothing new. We've talked about it here now for some time. And that is this chart here. This chart tells us the inverse correlation of basically risk assets, as well as things like gold and silver, and the dollar. The dollar is that blue line going down. I'm going to quickly show you guys what the dollar index looks like this morning. This is the dollar index. It keeps going lower. I think there's risk here of it bouncing, which would not be well received by lots of risk assets. But again, we don't know. We can only look at the weight of probabilities and then see how things shape out. In this case, we've got a tale of two sort of halves of the day. We've got the morning session, which will be, all else being equal, I'm going to imagine rather boring, unless someone leaks the Fed statement. But really, typically, what's more important on Fed decision day, it's not what they're going to do. I think everyone's kind of agreeing that they're going to go 25 basis points with a surprise factor of 50. It's really more, how does the Q&A session go? How does the press conference go, which follows half an hour later, so at 2:30 Eastern time. That's, of course, 11:30 a.m. Pacific time. So that's important here today. Now, the dollar is important, right? So the dollar is critically important because it slipped once again yesterday. Yesterday was a horrible day for the dollar. And we're getting more and more dovish, but you'll also notice that the inverse correlation that I just pointed out before, I'm going to zoom in a bit more so you all can see this. The inverse correlation between dollar down and risk assets up is not something that we can forget, right? So if if the dollar were to bounce because the Fed's a little bit less dovish than people are hoping, praying, and begging for, then there is a serious risk of these risk assets at least pausing, mean reverting, use whatever term you want to use. This morning I woke up, the first thing I looked at this morning, because of course I talk about it a lot here, is silver. I don't know how many of you guys recall, yesterday I probably mentioned it about 10, 15 times in all sorts of different places that I personally took profits on my silver futures position. That's because of exactly what I'm just mentioning right now. This morning, silver, it was at some point down about 2.5%. Now it's down about 1.7. This is a risk management exercise, right? I'm trying to just I'm not giving you advice. I can't give you advice here. I can only give you education and sort of insight of kind of the risk management process. But when I see something that's highly sensitive to a higher dollar, right, to a lower dollar, meaning silver has rallied in sync inversely with the dollar going down, just like gold, just like the bubble DAC, I call it, the NASDAQ 107th stock, magnificent, holy grail. And again, knows the sarcasm. The question is, what happens if the dollar were to bounce at some point? And I don't know if that happens today. I have no clue. I don't even care. I just want to be in a position where I don't give up a lot of profits if that were to happen. Another thing that we're actually doing this morning, if you are an ETF Salo member, you know that we added EMQQ. This is Emerging Markets Internet Stocks. We added that ETF a few months ago. It's had a huge run, like I think almost 15%. So we're actually removing that one because guess what? Let's add EMQQ to our dollar correlation chart. So I'm going to add here the chart of EMQQ, and guess that's the blue line that I just added here. Can you guys, I need some feedback here. Can everyone see there's one trade here, right? So for everyone that's bullish the NASDAQ because they love the fact that NVIDIA is the most amazing thing, which by the way, this morning's news on NVIDIA isn't so awesome, that's really not even the narrative. The reality is that the dollar is going down and these risk assets rally because algos, chart chasers, machines are all tuned to that trade. But when that reverses, and it doesn't have to be long, right? The dollar doesn't have to have a massive rally, that trade unwinds. And that's the risks that I see a lot of people are not completely unaware of because all they look at is a chart breakout and that's all they know. When in reality, the real trade is this, right? So, love to hear some feedback. If the less feedback I get, the more I know people either don't care or just completely don't understand. The don't care camp, there's not much I can do, right? A lot of people have to lose the money before they wake up. The not understanding part is then on me to make it better understood, right? For those people that care. So let me know. I'm happy to go and elaborate on this because this is critically important to understand, right? Now, Steve here is pointing out quad witching Friday on quad witching option expiration on Friday, right? That's nice to know and that's important. However, that's not going to be important from a macro perspective, right? That's from Steve. I think if I see correctly, you're Steve in the chat room. Steve is a pretty quick trader. In fact, very quick trader. That's not quad witching. This stuff here isn't important for the quad witching day, and quad witching day isn't important for this, right? So that's a very different time frame. But yes, there is that, and for those people that are quick, by all means. Joe wants me to elaborate. Let me elaborate, okay? There are 4 lines here. Joe, can you see 4 lines, right? One line clearly sticks out like a sore thumb. It's the one going down, right? That's the US dollar, the blue line all the way at the bottom. Everything else has rallied. Can you see that? So people that are pounding their chest about how smart they are for buying, AI bozo stock XYZ, and it's gone up. People that are pounding their chest that they are remaining long the NASDAQ 100 because they don't know how to risk manage. People that are long emerging markets in gold, right? It's all one trade. There is a big difference between gold and the NASDAQ 100 beyond this, but for the time being, it's one trade, right? So if your neighbor tells you he has a new amazing AI stock that his broker told him, right? uh, then uh, then then that's not because he's amazing at picking stocks. It's because it's one damn trade, right? As the dollar goes down, things are denominated in dollars are going to bubble higher at this juncture. At some point that can end, right? But it's because the denominator, as they call it, is getting crushed. So your purchasing power, right, is basically getting stolen from you. This is not me being political or conspiracy. That's, if anyone that knows me knows that's the last thing I do. I'm factually showing you a chart, right? So if you've made money in the Nasdaq bubble the year to date, first of all, well done, sincerely. However, please also understand that the dollar has gone down. So your purchasing power has actually maybe decreased, maybe increased a little bit because you made a little bit of money, but for the most part, you probably haven't made money, right? So that's important. RD saying EMQQ has no volume. It should have volume, and I mean, that's nice to point out, and I appreciate it. It's really besides the point. Yes, it does have volume. There's enough volume. It's not a day trading tool. EMQQ is an ETF that tracks internet stocks, emerging market internet stocks. And again, it's already the same. The point here is not whether this is volume or not. We did this trade and it's fine and it's all good. It's not a day trading vehicle. The fact is that it's rallied vertically, basically, with the dollar going down, right? Nicholas is asking, how many days do you give the market to establish its reaction after a Fed meeting? So I typically give it some time, right? It depends how severe the reaction is, Nicholas. If you're part in trade ops and certainly in the trade-a-thon today as well, we're going to be taking this apart day by day. But to me, it's not an immediate gratification reaction. It depends on your time frame. If you are a day trader, like Steven here is a very fast day trader, right? Then maybe there's something to do today. If you're a macro guy, as a macro person, the trade to do was in the past few days, maybe this morning, right? So for me personally, if I'm long something like silver or emerging market internet stocks, right? If I'm not going to take some profits here, right? Given the correlation I'm showing you, and silver and all this stuff has all gone vertically. If I'm not taking some profits here, I am not risk managing. I am gambling by definition, right? So greed takes over by a lot of people. Again, we live in this fantastic gambling bubble. Notice it's not a valuation bubble, although valuations are very stretched, but it's a gambling bubble, right? And so we need to risk manage. Most people just don't risk manage, right? That's the point. And Steve says he's happy. He thinks the S&P is going to be long until then. Steve, again, you're a very fast trader. You have to understand most people are not as quick as you are, not even close. And there will be drawdowns along the way. People don't blow up by not being long. They blow up by getting out at the wrong moment, right? And so that's the issue that we're having here. So it's important to understand time frames. I'm not quite sure, Steve, that your time frames mix at all with what most people's time frames are. So that's critically important to understand. Most people can't go in and out of the market every 5 seconds or 5 minutes, whatever it is, right? Pick your time frame. So so that's hopefully addresses your question, Nicholas. Mark is asking, is there an ETF for the US dollar? Well, I don't know where you live, Mark. If you're in the United States here, then you're just long the dollar by living here, right? But there is an ETF that you could look at. It's UUP is an ETF for that. UUP would be something that you could look at. Now, what is important though, and we mentioned this in a note this morning to our Trender momentum indicator members, and that is, and this is really important to understand actually, that the momentum, like even short-term momentum, actually remains bullish for the S&P 500. That's not a call for today. It's just saying that so far, the weight of the evidence, if you will, is that momentum remains bullish. So the Trender indicator, which is our momentum tool, it told us that bullish momentum started at the end of April, and it's still there. The S&P is up now almost 20%. So nothing has changed. Something can change, at least for some time. We just don't know. I think a lot of people are extremely overconfident in their ability to forecast, especially in this environment, right? And I see that everywhere with commentary. So, it's going to take, we've been in a very forecastable environment because it's not that hard to say, oh, chart goes from lower left to upper right, it'll continue. As long as that continues, everyone looks like a genius, but at some point that gets mixed up and then people don't look so smart anymore. So I'm trying to make, and that's also in that video, by the way, that I made, that I showed you guys before, that I would suggest you watch if you like. So that's the S&P, EMQQ we talked about the dollar. That's about what I want to talk about. So we've gone almost, good 15 minutes here. Nicholas, possible government shutdown, not important, in my view. Not important as far as I'm concerned. What's important here is that the NASDAQ momentum bubble continues for the market. And again, the top three most important things for today, for me, at least in this environment, again, remember, just for me here, my observations, also, of course, when I talk with trading desks all day, is this chart. So that is to say the most important things for me are the dollar, number one, the dollar, number two, and thirdly, also the dollar. I need to see what the dollar does today, the next couple of days, and see how the dollar, because that is going to impact interest rates, and it's going to also impact the Mac 7 magnificent, and beautiful, amazing, spectacular NASDAQ Mac 7 bubble that we have. So we'll see how it goes. I wish you guys all good luck today. Stay within your time frame, right? So for someone that's a really quick trader like Steve, that's a very different time frame than for other people that might be more macro or swing oriented, right? But today is a great day to do research. If for me as a more of a macro person, it's important to make decisions ahead of this kind of a thing, not afterwards. Afterwards, yeah, there's stuff to do for sure afterwards. There will be stuff to do, not necessarily today, but in coming days. But it's important to again pick your time frame. So anyway, for those of you guys that are Trade-a-thon members, we'll see you guys in about 20 minutes or something like that, and we'll be in trade ops as well. So good luck. Have a great day, and we'll see you soon.